a tax-free way to build generational wealth. That's right, this is something that's used by a lot of wealthy families, but you don't have to be wealthy to use it. It's basically a three-step process. The first step is you buy or invest in appreciating assets like stocks and real estate. What happens is when you invest in appreciating assets, you actually don't have to pay taxes on the appreciation. Let's take real estate, for example. You buy a property for $100,000. A couple years later, it's worth $300,000. Well, guess what? You don't pay any taxes on the appreciation until eventually when you sell it. Now, specific to real estate, if you wanted to sell it, you can actually use a 1031 exchange to defer any capital gains on the sale of the property, as long as you're following the 1031 exchange rule. So what does the wealthy do? They buy and accumulate a lot of appreciating assets during their lifetime, and they don't have to pay taxes on the appreciated value until they eventually sell. So if you don't sell and you hold on to it, then that's a way to grow wealth tax deferred. The second step is to borrow. Now that your assets have appreciated in value, you have a lot of equity tied up in that specific asset. Again, if we're using real estate as an example, I bought it for $100,000, now it's worth $300,000. All of my equity is now currently in that property. Instead of selling it and paying taxes on the gain, what I could do is I could borrow against the equity in that specific property. A cash out refi allows me to pull out some of that money in the form of cash without paying any current taxes. And guess what? If I use that money to then reinvest in other real estate, not only did I not pay taxes on the refi proceeds, now I can write off the interest expense against the rental income that's been generated. And I know in my example, I am talking about real estate, but the same exact strategy could be applied to other assets, for example, stocks. Did you know that you can actually leverage your stocks? For example, using your stocks as collateral to borrow money against it, and that would also be tax-free proceeds. You can use that money to then reinvest in other stocks or even real estate. If you're a business owner, guess what? The same thing could be done with respect to your business. If you have a lot of equity built up in your business, you can actually borrow against the equity in your business, not have to pay any taxes right now on the refinance proceeds. And again, the interest expense is deductible if the money was used for business or investment purposes. And the third step to tax-free generational wealth is passing it on to the next generation. Currently in the US, we have what's called step-up basis. Step-up basis means when I pass away, the value of my assets gets stepped up to fair market value. So going back to our real estate property as an example, if I bought the property for $100,000 and let's say it's worth $1 million when I pass away, my beneficiaries, whether it's my kids, my grandkids, they inherit that property at the $1 million value at my date of death. Now you have to make sure you're setting this up appropriately through your estate planning, but generally we are able to preserve step-up basis. Currently, up to the first $14 million of assets are free from estate taxes, and if you're married, that number is doubled to $28 million. So when you hear about the tax law favoring super wealthy people, where they get to buy assets, tap out into the equity tax-free, and leave it to the next generation tax-free, well, guess what? We just talked about a way that everyday investors can do the same with a property that you buy for even $100,000. But here's a mistake that I see all the time, guys. The mistake is the parents or the older generation inadvertently adding their kids or grandkids to title, thinking that it's going to help them from some perspective. In order to get the step-up basis, the asset should not be titled in the name of the next beneficiary until date of death. So something really, really important to understand. If you have any questions, drop it in the comments below. And of course, be sure to like and subscribe for more daily tax tips.